Good morning, everyone. I'd like to give you a quick recap of last week and insight for this week. The wheat market has rebounded after sell-off, particularly on Nasdaq for after 10% sell-off. Great news about yield curve drop during the week. Great Treasury note auction, healthy CPI data, and the announcement of 1.9 trillion stimulus approval drove the market to higher. By Friday, the Dow Jones Industrial Average closed at a record high on Friday. Bond yield, however, rose slightly on Friday after President Biden signed its stimulus plan. For a week ending March 12, S&P 500 ended at 3943.34, Dow Jones Industrial Average at 32778.64, and Nasdaq Composite ended at 13319.86. Nova saw 20% in Friday trades after its COVID-19 vaccine was found to be 90% effective. Share of Ultra Beauty dropped 10% after its fourth quarter earnings report missed analyst estimate. GameStop continued to jump and ended at $264.50 for a week. AMC Entertainment, symbol AMC, also hit record high after short sale at $11.16 after LA County said that Los Angeles would be lowering COVID-19 restrictions. Sentiment Apple was also hurt by signs of weak iPhone demand. Boeing received an order for 24,737 MAX 7 jets and stock moved up to 52 weeks high. Remember, I project this stock to be $300 and probably, $270 to $280. Maybe you can sell it, closing up. Even if it's not, you will have bought it at $195 to $205 at the time I advised, so it's still a very remarkable return. Chinese tech stock fell due to the fine of e-commerce giants related to antitrust. Growth stocks such as EV rebounded from previous lows, except Lost Time Motors Corporation, symbol RIDE, R-I-D-E, due to inflated revenues. XPeng revenue exceeded estimate, but earnings per share loss fell short. XPeng CEO explained that January sales was weaker, but it's projected expected strong March sales. Stock went up from low 20s to $35. From technical perspective, it is projected to rebound to $39 by end of the month and reach $45 by end of April. Well, we'll see. I mean, again, assuming that the environment, very good trading environment, optimistic, not like the sell-off that we experienced a couple weeks ago. WTI oil price was as high as $69 and ended $65.41. Gold fluctuated and dropped below $1,700 during the week, but climbed back to meet $1,700. The Transportation Security Administration said air travel hit its highest level in nearly 1 year. TSA on Friday screened 1.35 million people, the highest since March 2020, the agency said. This explains why airline stocks went up. Asian market were mixed with Nikkei index up 0.17%, but Shanghai and something compensate were down by 0.96 and 2.71% respectively. European markets are up slightly. US futures are mixed with Dow up 70 points, but Nasdaq down 10 points. Bitcoin surged over $60,000 and gold is up slightly with oil down 0.6%. For the upcoming week, we're also looking for catalysts to drive the market higher. Yet investors should be expecting continuous volatility. The Federal Reserve monetary policy meeting will be a big deal for affecting global financial market. Interest rate is expected to be unchanged. The U.S. Central Bank will also release new forecasts for economic growth and interest rate. U.S. retail sales data will be in focus for further indication of economic recovery. On earnings, FedEx, symbol FDX, and giant athletic apparel giant Nike, symbol NKU, will be reporting financial results. Furthermore, monetary policy announcement from Bank of England and the Bank of Japan will also be on the agenda. More than 80% of investors surveyed Bank of America this month cited higher rates and less dovish central banks are biggest risk to start in 2021. And I just want to walk through it really quickly with this slide that you see on the screen. This one is basically looking at S&P 500 PE based on trailing earnings. And you see the two circles here. This is where we are at right now. And this is in 2000, where it, bubble. People will know what those period about is called the high-tech bubbles. They are very close to the level. That's why what that means is when people say, hey, is the stock market a big bubble? There's some indicators showing that is possibly coming. The other one is Warren Buffett favorite to compare with the market return and how things looking. So if you look at the equity market and versus the S&P 500, and obviously the S&P 500 right now is much higher than that, and in the old days you see they're pretty much in line with each other, very close. So right now these are actually totally lined up. So this is also saying that now the valuation is too high. And also this is another one very, very obvious if compared with the 10-year Treasury bond with S&P 500 for yield. And you can see the S&P 500 is way above the 10-year Treasury bond yield. And so historically, they are much more, if you see the older day, they're much more closer in alignment. Well, this is where the bubble happened again in year 2000. This is where the bubble again, financial crisis again, 2008. And this is where we're at right now. So that's why, I mean, if you look at this measurement, there were definitely concerns about market bubble. And this is another even one is much more obvious, when the graph are kind of, doing it in a perspective comparison with other years. But then, at the same time, though, what we need to look at, this is a valuation modeling and versus the 10-year Treasury view. You can see that, this is similar message and definitely way above. So that definitely concern is valid. But you also have to look at the perspective of earnings, which is kind of different than the bubble time, that the earnings is really substantiated with the future growth, and the percentage landed on that, 2020 when the pandemic was forecasting negative, but now we're in positive territory with ISM services actually very, very solid and strong, which measure manufacturing productions, and the unemployment rate is actually from pandemic high 14.8% down to 6.2%. So I mean, you can look at the economy is very strong with coming back and reopening, but but definitely there's some concern with the rate, but historically is 2.5 to 3% curve view. So really doesn't really too much concern, but in the interest rate, we'll see how FOMC, the Powell will be making the speech this week or so. So I think the market, eventually, ultimately, will understand absorbing that as reality and remodeling, forecasting, how the valuation and the stock worth and and the people, you will revise the forecast and precision investment portfolio strategically. And I think in next week, first quarter results completed with fund managers will reshuffle. We'll see some changes on maybe cynical stock will be even more higher. Bank will be higher, and there will be some good high tech stock that popular at the low enough point dipping and will be rebounding. Have a nice day.